Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking RH. I mean, this stock, last earnings, stock popped to nearly 3-year highs on this stock, but it is just cratered 45% from those levels over the last 3 months. What's going on with this stock? Because it seemed like it was a pretty good earnings report. They gave okay, guidance moving forward. Is this all about the consumer and the sentiment and confidence numbers pulling back?
Yeah, whenever we look at this name, I was actually excited that I got to talk about this one today and not the names we've talked previously, talk PayPal or UPS, because this is actually an instance where we are starting to see some divergence in our data. And that's when our data is heading in one direction and the stock is heading in an opposite direction. Because like you mentioned, last quarter, the company put out a pretty nice report. There was a surprise profit. Revenue was up about 8%, raised guidance. Stock initially popped and then has since sold off. On our end, we see investor sentiment turning a bit sour. A lot of investors are worried about a slowdown in demand, whether or not Restoration Hardware can keep up that demand and that pace that it noted on its last earnings report. And then, there's also questions about inventory level. I know RH ended the quarter with inventory at about 30% higher levels than they were in the prior year. So if that demand did cool, that would be a bit of a precarious situation. How does that play out with pricing and margins, et cetera? And so I think that there's a lot of fear, a lot of uncertainty. The housing market is still not great. And so these are headwinds for Restoration Hardware. But when we look at our data, we actually see a pretty nice quarter that the company is about to report. We have demand up on a year-over-year basis, and not only is it higher on a year-over-year basis, but it's doing better versus peers. And this is a name where it actually is helpful that Restoration Hardware is catering to that luxury consumer, that luxury buyer that may be a bit more insulated from a struggling economy versus other consumers. And so 10% year over year, it's not anything wild or crazy. This isn't a massive number that we're bringing, but it is interesting to see this diverging from the drastic downturn or pullback in the stock.
Megan, this is a company that their long-term vision is $20 billion in sales and 20% margins, and they haven't gotten there yet. They went through a pretty harsh post-pandemic, rut that they got in. But the good news is, in the second half of 2024, this company started to grow again. And these aren't showrooms, they call them galleries, and that's because they look like galleries. And they are not this is not IKEA, right? This is high-end furniture for a high-end customer. And they play that up pretty hard. But a good economy, improving economy, a consumer that feels that their wealth is going up, if they start to grow again, then this stock which has sold off, as Tom mentioned, very hard lately, is probably looking pretty attractive if the numbers start to show up, right? Because it's still not relatively cheap, but as you know, this company has the ability to move this stock, and boy, they are a high-end furniture seller, Megan.
Yeah, they are. I've actually been to one of their warehouses. The last time I was in Nashville, I had brunch there, which is crazy. And it's a brilliant concept, but it's certainly leaning into that luxury branding. And that resonates really well when it comes to a sentiment level. This is very high sentiment, but also very high price point. And I think that that's something that leadership noted on its last call, is that it was investing in disruptive pricing, however you want to take that, to be more competitive, to try to keep margins healthy while reducing pricing, to attract some more, a different clientele, expand its customer base that, perhaps its brand had gotten so inflated that it was alienating some customers. So it'll be interesting to see how that long-term plan and vision plays out. But at least on our end, when we look at this from a demand perspective, we see Restoration Hardware demand actually looks like it still did have momentum in the quarter. So some of these fears may be a little bit overdone at these levels. I will say we are seeing a bit of a cool down whenever you look at things. If you pull out to just a 30-day moving average, we're starting to see a bit of a slowdown in that momentum. And so, that could certainly be a red flag when it comes to guidance, but at least for the quarter, we see a pretty nice quarter here, and the stock is sold off quite a bit. So it makes you wonder, where are expectations? Expectations, even with this pullback, still feel very high because the company did raise guidance last quarter. So we'll be watching to see if they can kind of meet and cross that bar. But at least from our data perspective, this is one where it's definitely intriguing because, we see things and we don't see that the world is ending for this company. We actually see a pretty nice quarter that the company's about to report.
Yeah, it's had that massive pullback. And I was at one of the Restoration Hardwares, or the RHs, outside of London, and it was spectacular. I mean, beyond belief. It's a lifestyle brand now, Megan. They've got a yacht. They've got a hotel. They're going to expand those. But the furniture is quadruple the price any place else you go. So the affluent consumer maybe going to start making other decisions. You got tariffs that are going to impact this industry. Does that create any headwinds for your data that looks pretty good?
Yeah, one thing we did look at tariffs because we said, okay, is this a company that's going to be impacted? And the company noted on its last earnings call that it had actually started sourcing away from China and even away from Mexico, that it thought it was really well positioned to navigate kind of the uncertainty that tariffs bring to it. But I will say on the international expansion front, I think that that's still a big question mark, definitely a large investment from the company as it does expand overseas. And just from a sentiment perspective, I will say we're seeing a bit of a mixed bag. Restoration Hardware, if you look at consumers here in the U.S., the sentiment is very high, but overseas, it seems like there's a bit of a mismatch perhaps in the products that they're bringing to market. For example, we saw a lot of tweets from consumers who were talking about visiting the Restoration Hardware in Paris and that maybe the furniture was a bit oversized and didn't quite fit into the spaces that they were looking for. And so we'll see how that international expansion goes, a bit of a divergence in sentiment as it does expand overseas, but at least among U.S. consumers, sentiment is very high and demand looks like it was nice in the quarter.
Yeah, the stock's pulled back over $200 from those highs that we saw in December, so it's had quite a slide. All right, great stuff, great data as always, Megan. Appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at